Hey guys, it's Buzz Glover here from BizLoanConsultants.com. I thought I'd shoot another quick video about a question I get asked quite often in email and through comments on some of my blog posts. And I'm trying to shorten these videos so you don't have to sit for a half an hour or so. So let me get started here. Just first of all, I am the founder of BizLoanConsultants.com. I'm the author of Business Loan Brokering 101. And I am a 20-year veteran of brokering commercial business loans, mostly in equipment finance. And throughout the years, I have done some commercial real estate business as well as some accounts receivable and some other types of funding. So I have quite a bit of experience doing what I teach here. But anyways, one of the most common questions I receive in my email is, who pays you when you broker a business loan? Or how do you get paid as a business loan broker? And I think there are some misconceptions on how you get paid and when you get paid as a business loan broker. And in this short video, I thought I could clear all that up for you. Let me go through a couple things that I thought would be worthwhile discussing prior to getting into a couple examples. One, you typically don't get paid monthly as your borrower pays their loan to your funding source. You get paid upfront when the transaction closes and funding takes place. With the exception of some merchant cash advance loans and accounts receivable finance loans, where you might get paid periodically as the borrower pays and continues to borrow from the deal that you brokered. So what I'm telling you is that as a business loan broker, when you broker a loan, you get paid up front. You don't continue to get paid as the customer's paying. So it's kind of a nice part of the business. You find it, you put the banker or the funding source together with the borrower. They sign the documentation. The bank or the funding source either funds the equipment vendor or they fund the seller of the property, and you get paid at the same time. So the second point, most, if not all loans you will broker will be what they call non-recourse loans to you as a broker. Meaning if the borrower defaults on the loan or the lease, the funding source cannot come back to you for the fee they paid you, unless, of course, you are a slime ball and commit fraud in some way. So basically what I'm telling you there is that once you put the funding source together with the borrower and they do the deal and you get paid on the deal, you typically are off the hook as far as if the borrower would default on the loan, you would continue, the funding source doesn't come back to you and ask for their fee back that they paid you. You're off the hook. They've done their underwriting. They've done their credit work. And there are a couple exceptions to that. One, like I said, if you're a slime ball and you commit fraud, they can come back to you and sue you for the fee. Never had that happen. I've never done anything to make that happen to me. And nor should you. But the other thing is, I think they have what they call a first payment default, and that's where if you put a borrower together with a funding source and the borrower failed to make their first payment, then there's a good chance that the funding source might come back to you and say, hey, they didn't even make their first payment. This deal wasn't legit, and ask for your feedback. I've never had that happen as well, but I know that it's out there and it does exist. They call it a first payment default, and it could come back to affect any commissions that you make. The next point, on equipment finance deals, you will almost always get paid by the funding source with your fee built into the monthly payment. And in commercial real estate deals, it is more likely that you're going to get paid by the borrower with a fee agreement in place. So just to give you an idea, and most of the emphasis on everything I teach is in these two areas of brokering business loans because that's where the most money is. It's either in equipment finance deals or in commercial real estate deals. In equipment finance deals, you're going to go out, you're going to give a monthly payment to the borrower. The borrower is never going to see what fee that you build into it. The banks and the funding sources who do this business with brokers, they know that you're building in a fee, and they will pay you accordingly, and the borrower never needs to know what your fee is. That's in equipment finance. In commercial real estate, it's different. I recommend, and I highly recommend, that you get a fee agreement in place with all the commercial real estate deals that you do. Basically says that, hey, I'm going to go out and find a funding source that is suitable for you, that you will accept their terms. And for me to do that, you have to pay me X amount to bring you together with this funding source. And there's a lot of ways to sell a fee agreement. I mean, you don't want to look as though you're just charging up and above what the bank is. And I kind of get into that in some of my mastermind. But the thing I want you to know today is that in equipment finance deals, typically there's no transparency to the borrower. They don't know what's going on behind the scenes as far as your fee. And in commercial real estate deals, they are going to know because you're going to have a fee agreement signed with them. And I highly recommend getting a fee agreement because you don't want the borrower to go around you and do the deal with the funding source and you not get paid on it. That's kind of your only bit of security with the borrower if you run into someone who's, kind of going to take advantage of you and try to cut you out of the deal. The last thing here is the pricing on your deals is a bit of an art, okay? So you can't, I'd love to say, hey, here's what you're going to charge on this size deal. Here's what you're going to do for this type of deal. Here's what you're going to charge for this type of deal. There's a little bit of an art involved in it, and I'm going to try to get into that here a little bit so you kind of understand what some of my reasoning is when I price my deals. Okay, some of the other things you should consider when pricing or charging your commission rate, okay? Keep in mind that smaller deals in many cases will be as much work for you as larger deals. If you're working in the wrong niche, where there are very small transactions, you will need to charge more for your services than if you're working on larger transactions. So if you're out doing, and this is a problem that I see with some of my mastermind students, is they go out and they start trying to do $10,000 or $20,000 deals, and you have to add a huge amount of points into those deals to make a fee. Just so you know, in my experience, I very rarely made anything under $1,000 on a deal. A lot of it was because of the types of deals that I went after. I highly recommend that when you're looking at niches, that the average transaction size is somewhat at a high enough level that you can make decent fees on the deals that you're doing. The next point, if a deal comes to you and you know that it has been shopped extensively before it came to you, you'll want to charge a much higher percentage for your services, sometimes the maximum your funding source will allow. So this is a little bit of the art of the deal here. If an equipment rep called me and said, hey, I have a guy that's interested in getting funding, but he's having trouble, and he ran it through this bank and this broker, and he's run it through 6 other people, and he expects you to be some type of heaven-sent broker to get this done. And by the way, a lot of times you're not going to be able to get these done either, so you got to kind of learn what the time wasters are. But the first thing I would do on that is let the customer know that, hey, and you're not going to tell them the percentage in an equipment deal. You're going to say, hey, look, I think I can get this done, and you might add 16 points into the deal. In a commercial real estate deal, say it's a hard money loan, you might put on your fee agreement 4 or 5% versus the typical 1% that you would be using for someone that had better credit. So, like I said, that's where the art of the deal in pricing your services comes in. So, first thing I would always ask a referral source when they sent me a deal is, who else has seen this deal? It's kind of from being in the industry so long. Unless, I should back up, unless I know that this guy was kind of committed to me, I was his go-to guy, I was getting first looks at all of his business, which is the ideal situation, and that's what you strive for in this business. But if I knew it was a referral source that maybe called me once a year or once every 2 years, and I knew that he was having trouble with other banks or funding sources, then I would ask them, who else has seen this deal? And typically they'll know. And if they don't know, the borrower will. So after you jump off the phone with them, you start getting the information from the borrower. You ask the borrower, who else have you shopped this out to? Or who else has seen this deal who has turned you down? And why did they turn you down? So point number 3 here, funding sources will place limits on the commissions you can earn. Most local and regional banks will be more conservative in this area. So some of the funding sources are going to tell you, hey, the maximum you can charge is 16 points on an equipment deal, say, for instance. Or, some of the, and I also put in there, like, I dealt with a lot of local and regional banks who I partnered with pretty heavily, and they kind of understood the business I was going after, and I understood what they were looking for. And a lot of times they'd say, hey, you can't charge more than 2% on a deal or 3% on a deal. And these were good credits, so you couldn't get away with charging much more than that anyways. And I remember the one quote one banker would always tell me, he says, you're not going to make more on this deal than we are as the bank. So just so you know, behind the scenes, some funding sources you're dealing with are just going to say, hey, you know what? This is what we allow our brokers to make on a deal. Let's see here. The larger the deal, the less commission you'll be able to take, usually because of competitive reasons. Okay, obviously, if you're doing, I always say in the most traditional commercial real estate loan that you're going to do is a permanent, what they call a permanent loan, which is typically a commercial building of some sort, maybe an office building or a strip mall or a multifamily use, where the investor who's buying the property will give you 20% equity. They will want a 20-year amortization or a 25-year amortization. There'll be some prepayment penalties. Most of those, up to say $5 million, your fee my starting point was always 1%. When you get to 5 to 10 million, you still want to try to get, I would always try to get maybe even 1% up to 10 million, but that 5 to 10 million is a kind of a gray area. So that's where you might drop your fee on a commercial real estate deal down to, 0.75%. So at 10 million and above, I would never on any deal charge less than 0.5%. But that's kind of the breakdown that I have as far as my thinking. Other brokers might have different pricing strategies, but that's kind of gives you a good starting point anyways on what I would look at. Obviously, when you get into a $10 million deal, it's going to be hard for you to charge 2% as your rate. Now, if you know that the deal's been shopped all over and you can figure out a way to sell that higher commission rate in a fee agreement in a commercial real estate deal, then go ahead and do it. As far as equipment finance, the last business that I was involved in a startup in 2015. We never took less than 2%, even on large, couple $1 million equipment finance deals. That was kind of our minimum. We said we're not going to do a deal unless we can make 2 points on it. We don't care if it's a $1 million deal or a $5 million deal. And if the deal had a lot of hair on it and we had to spend extensive amount of time shopping it and trying to get it done, we might even charge 4 or 5% if the funding source that we finally ended up with would allow us to. So, and there's a little bit of going back and forth with the customer at that point. Hey, you know what? We couldn't get it done at this monthly payment. I can get it done at this monthly payment. Are you willing to move forward with it? And just so you know, bigger companies who are leasing equipment and borrowing money for equipment, they have problems just like small companies do. It's not like if you're a big company that you don't occasionally get into a jam where you have to use a broker and the banking relationships that you have aren't willing to step up to the plate. So now you're kind of at the mercy of a broker to go out and get this business done, usually at a higher monthly payment. So, in equipment finance deals, the fees will normally range from 1% to 16%. In commercial real estate deals, the most common fee is 1% for a permanent loan. And for hard money loans, the fees can go higher, possibly 5% or even higher. I haven't done a ton of hard money loans, but because they are hard money, they're harder credits to get done. Typically, the fees can be higher. Let me give you a quick example. On an equipment finance deal, I just used a very small deal. It's probably not the best example because I don't recommend that you go after. The reason I picked this one because I actually had a root canal this morning. That's why if it sounds like I'm talking funny, the Novocaine hasn't worn off yet. But I was sitting there in the operatory while I was getting that root canal, and there was the first thing they do is an X-ray, and I know that piece of equipment's like a $10,000 piece of equipment that In the old days, they would take an X-ray and they would run film and then have to go develop the film to look at the X-ray. But nowadays, it's all done digitally. And those little sensors they stick in your mouth, along with the software, cost around $10,000, I think, for one of them. So when I was working this up, I just thought I'd use that as an example. So on a $10,000 deal, I'd probably charge 10 points, which means I'd make $1,000 on it. That was kind of my threshold. I didn't like to work on deals unless I can make at least $1,000 on it. So what does this mean to the customer payment? And a lot of this, just keep in mind, you have to work this out on a financial calculator. I have gotten into that in previous videos. So if you reach out to me, I'll maybe send you a link to that video to show you how to do this on a financial calculator. By the way, there's really only one calculation you have to learn, and you use it over and over in this business. And it's very simple. Once you can learn it in 5 minutes, and you'll use it all the time to figure out what monthly payments are with your fee in it. So let's just say that you were able to partner with a local bank who's going to do this $10,000 deal. They're going to fund it for you. As the broker, and they're going to, and the local bank's going to charge you, say, 7% to do this smaller deal, which isn't unreasonable on such a small deal. And it's a $10,000 lease. You're doing a 60-month term. There's going to be a $1 buyout at the end of the lease, which means basically that there's no balloon payment at the end, and the customer just owns the equipment. The payment that the bank would charge to the customer each month would be $216 a month over a 60-month term, and that includes the $1,000 that they funded you when they wrote the check to the dental equipment vendor. So they write a check to the dental equipment vendor. They write a check to you for $1,000. Then they start collecting $216 a month off of the customer. Okay, a lot of people think because if I used the bank at 7% and I added 10% onto that for my 10 points for my fee, a lot of new brokers will think, oh, that's 17% fee, and that's not really what it is, because you have to look at the time value of money. If you figure this out on your financial calculator, you would see that by adding that $1,000 commission into this deal, the effective rate for that borrower is really 11.23%. And by the way, I figured this out on my HP 17B calculator before I did this video. And once again, I do have a video for this to show you how this works out. It's not, you can't take the 7% that the bank charges for their money plus the 10 points that I added into the deal and assume that it's 7% plus 10%, so it's 17. It's just not how it works. And you need to know that when you're figuring out commissions. So my point is, you really only raised even though you added 10 points in the deal, you've only raised your borrower's rate by about 4.23%. FYI, your fee is not transparent your fee is not transparent in an equipment finance deal, and most, if not all, the deals you do will be leases. So in equipment finance, your fee, your customer never needs to know it unless you would reveal it to them. Occasionally, you'll have a customer say, well, what's my interest rate? And you just tell them that it's 11.223%. If I used to say, hey, this is a lease. It's a rental payment. You can't really look at an effective rate. But if you press me on it, here's what it is. So on commercial real estate deals, the average deal, according to the Realtors is a trademarked organization. I read this, I think, in 2015. The average commercial real estate transaction for what they call small commercial transactions is $1.6 million. So the average transaction out there for a commercial real estate building of some sort is going to be $1.6 million. So you back out the equity on that deal of $320,000 because the customer is going to have to come up with some type of down payment. And they typically, on the low end, it's going to be 20%. So you got $320,000 into the deal as equity. So the total amount funded is $1,280,000. The typical fee that I would start out with on my fee agreement when I went out to this investor who was looking to get funding would be 1%. So the fee on this deal you would earn on this average transaction is $12,800. If you have an investor who is beating you up over your fee, I'm not sure that I would continue on with them, especially on smaller deals. If they're running $10 million deals and they want you to only get a 0.5% fee, then by all means, I would probably back off my fee. But keep in mind, you are paid by the borrower, ideally at the closing, based on a fee agreement that the borrower signed with you prior to putting the borrower and funding source together. Some funding sources will pay fees to brokers, but in most cases they are fully disclosed as broker fees to the borrower. You should always get a fee agreement and signed in any commercial real estate deal. So the point I'm making is that in commercial real estate deals, it is transparent, and the borrower will know what you made on the deal because it's usually stated on some disclosure form. Okay, some final thoughts about today's video and getting started as a business loan broker. One thing I talk about all the time is this is the one business that can give you huge upside potential. You can find deals that are really good, big size transactions, and you can close them. You got to keep in mind 40% of all the bank loans in some banks you can go to, and it might be as high as 60% of the transactions that they bring in, their credit department will decline. 40% on the low end. So there's a huge market out there for business loan brokers who can go out and work in that space where a bank declines them, but they're not so bad that maybe either another bank will do them or some national funding source that will do them. They'll probably do it at a higher rate, and you can earn a nice fee in the meantime. You can get started in this business on a shoestring budget. You don't need a ton of money. You can do it with most of the things you already have in your home office, a phone, a desk, a computer, scanner. You don't even need that up front. You need to get a website. You need to get a logo. You got to name your business, and you got to form an LLC. But everything can be done way lower than any other business. And like I said, the upside potential of this business, I would put it above anything. So the last thing I'm going to leave you with, at some point in your decision making and I've started a number of businesses that brokering loans allowed me to. I was making enough money that I went out and started investing in car washes. But each one of these businesses I started, at some point, at some given time, I said, I'm ready to do this. So with any business startup, you have to tell yourself, hey, I'm ready to do this. I'm going to do it today. I'm going to get started in it. I know there's going to be some hurdles along the way, but I'm ready to do this. So just keep that in mind. If you have any questions or comments about this video, please leave them below. I'll make sure I get back with you, or just reach out to me via email. I try to answer all the questions very quickly, and I will help you any way that I can to get you started in this business. Appreciate you joining me here today, and get ready and say, I'm ready to do this. Appreciate it. Talk to you soon.